One common frustration I hear and see among dividend investors is just how large your portfolio has to be to actually live off dividends. It can be discouraging when someone realizes how big their portfolio has to be to actually live off that income. How do we live off our dividends sooner rather than later? The solution to this problem is another dividend strategy known as the income approach. There's still dividends, but they enable you to get a lot more dividends on your current portfolio. In this video, I'm going to share with you the key differences between a dividend growth investing technique and a dividend income driven investing technique. They're both dividends, but one of them gives you a lot higher income now, so you don't have to wait for years or decades later to be able to benefit from your portfolio. Now, the goal here is not to discredit dividend growth. I like the dividend growth model, and I buy some stocks that are geared towards dividend growth, but I also buy stocks that are focused on producing current dividend income right now. Income I don't have to wait for decades. Let me show you what I mean. Here you see CBOE Global Markets Inc. This is a company I really like. They have a long history of being very profitable, so it's a really well-run company at this time. The problem with this stock is that its dividend is only 0.59%. For every share you own, your dividend is only 63 cents per quarter. Let's say, for example, you have $5,000. Since each share is $209, you'd only be able to own 23 shares of CBOE with that $5,000 investment. How much income will those 23 shares pay you by means of dividends? Since it's 63 cents per quarter, it comes out to only $14 per quarter. It only comes out to right at $58 per year. And that's on a $5,000 investment. If you're looking for income, that's not very encouraging. However, CBOE is what I consider a long-term good investment. So whereas I own some of this, I don't own it because of the dividend it pays me. However, there are other companies I do own because of the current dividend. But here's the thing about CBOE. Even though it pays a very low dividend, notice how fast it's growing this dividend. Notice its most recent dividend increase was 15%. Over the past 5 years, their average increase has been 13%. And over the past 10 years, they've increased their dividend on average 12%. That dividend is growing very fast. And here you see it graphically represented. So it looks really good from a dividend growth perspective. However, from an income perspective, as of right now, it looks terrible. But is there a better way? Absolutely. Here you see another company I trade, and it's what's known as an MLP. So if you're not familiar with them, you might want to do a little research on them before you begin to trade in them. But it's basically in the oil and gas industry. Enterprise Products Partner is one that I own. And notice what its dividend is. Its dividend is right at 7.22%. That's a whole lot higher than CBOE's, isn't it? Remember with CBOE, our annual income is right at $58 total for a $5,000 investment. Well, how much would it be for EPD? We take that same $5,000 investment and divide it by its current price of $29.45 per share. That means that we'd be able to own right at 169 shares. Those 169 shares, they'll pay you right at 52.5 cents per quarter. That means you'll get $88 per quarter for owning this company. That's already more than we would have collected for the whole year with CBOE for that same $5,000 investment. Now we multiply that times the 4 quarters a year. We see that owning $5,000 of EPD, it'll pay you right at $354 per year. And of course, if you have a lot more money invested, your numbers get substantially larger. But you see the difference here. I mean, it's a massive difference in current income. However, you want to keep that dividend growth in mind. Remember with CBOE, it's grown its dividends on average over the past 10 years by 12%. What about EPD? Remember, we get that nice high dividend. However, although you get a nice high starting dividend with EPD, it's not growing nearly as fast as CBOE's dividend is. But you get that nice high starting dividend. If you're looking to live on your dividends, you might want to consider higher dividend paying stocks. Let me share with you 2 example portfolios, one a dividend growth investing strategy and one geared more towards income, so you get a good idea of what you might expect. First, let's look at a dividend growth sample portfolio. Now what I've done here is I've taken about $100,000 and invested in 5 dividend growth stocks. And here you see the stocks. Now these are not my suggestions. These are simply ones that are on my watch list that I know are known for growing their dividend. We have CBOE, DOX, G, LMAT, and MA MasterCard. Some of these you're probably familiar with and some of them you might not be. They're ones that I feel comfortable owning at some price. And notice their current dividend yields. They range from a high of 2.24% to a low of 0.57%. So you're not gonna get paid much money up front for this. In fact, if you've invested $100,000, notice your annual income is only $1,277. So that's not that great. It doesn't pay you much income. However, notice what can happen over time. Notice on average with these 5 companies, they've grown their dividend by about 12.2% on average over the past 5 years. So whereas the current yield is only 1.25%, you can expect that to grow by over 10% a year. In fact, notice this income forecast. This reflects your dividend growth over time. And these dividends are not reinvested. In the bottom right corner, you see the graph of your income over time. Currently, it's paying about $1,200 a year. And remember, that's about a $100,000 investment. In about 5 years, it will go way up to $2,000. In fact, you fast forward all the way to 2044, which is 20 years from now, it'll be paying you about $8,500. So there is very nice dividend growth over the next 20 years. What about a portfolio that focuses on income? A high current dividend portfolio. Again, I've picked 5 stocks. Again, these are not my suggestions. They're just some of the higher dividend paying stocks that I currently own some piece of these companies in. Notice that on average, the dividend is around 10.96%. So a really high dividend. And yes, some of you say, well, Randy, that's because they're higher risk. And I agree, some of these are higher risk and other ones are more just geared towards income. In fact, EPD is one of the ones in this portfolio. How much could you pocket right now every year starting this year if the dividends were to remain the same? We're getting our sample portfolios right at $100,000. Notice our income is just over $11,000. And recall in our previous portfolio, the dividend growth portfolio, our income would be right around $1,277. So a lot more dividends every month, every day, every year for this higher income portfolio. But what about growth? Will your dividend grow? Here you see kind of a summary of the dividend situation. Notice that you will experience dividend growth. Over the last 5 years, these 5 stocks have grown their dividend on average by 5.7%. However, that's a lot less than a 12.2% dividend growth portfolio. So what can we expect as far as dividend growth over time? Well, currently, as you saw, we're going to pocket around $11,000 a year for a $100,000 investment. And those dividends are expected to grow if they continue the same way they have been over the recent years. Notice that fast forward 5 years, and our dividends will be up to about $14,500. And in 20 years, they'll be about $33,500. So some really nice income from this $100,000 investment. Now remember, we get $33,500 in about 20 years. And if I switch back to our dividend growth model, it's still a lot less. Even 20 years in the future, even with all that growth, it's only at $8,500. So what are the benefits of investing for dividend income now as compared to later? Well, as you see, you get a lot more income. If you do it right, you can still experience some nice dividend growth over time, like you see we have here with this example portfolio. So when should you invest in dividend growth versus dividend income? One simple way to know is, do you need the income now? Well, if you need that income now, you can gear your portfolio more towards income investing. However, make sure that those companies are expected to grow their dividend. You don't want to be receiving nice income now and experience no growth, because inflation can really eat away at the value of your dollar. So even with an income investing approach, it's still important to have dividend growth in there. However, if you're younger, then you might want to invest more towards dividend growth. These are typically companies that are growing not only their dividend over time, but more importantly, the value of their stock is expected to grow over time as the company grows. You see, instead of paying out a lot of their income to their investors, they're reinvesting that income, hopefully at a compounded rate, in the long term will result in a lot higher stock price. Since income isn't important to you now, that stock price appreciation could go a long way towards growing your portfolio in the coming years. One of the possible negatives when it comes to income investing or investing in higher income paying stocks is just the tax ramifications. If you're investing for income, you're receiving those nice high dividends, make sure you understand the tax ramifications. So maybe meet with your CPA if you don't understand how that works. Another tip might be, if you're investing for income, let's say you don't need all that income, but you still want to invest for income. How could you grow your portfolio? We can always take some of that income and just buy additional shares of your favorite company. I like to buy companies when they're on sale or selling what I consider to be a discount. So you could take some of that income that you probably will have to pay tax on. You can take some of it and buy more of your favorite companies when you don't need all that income. And then when you do need the income, well, you just stop buying. But it's a nice way to grow your portfolio, even if you have an income-based portfolio. Personally, I do both of these strategies. I like to buy some that have potential for growth, but also like to buy some that pay me current income. You see, I am currently living off some of my income from my stock and option trading. So I like a combination of the two. But if I was younger, I wouldn't worry about collecting dividend income. I'd be more focused on solid companies that are trading at a discount that have potential for nice growth and the potential to grow those dividends over time when I might need them later on in life. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. It's vitally important, if you're buying stock or selling options, that you only buy those companies that are very high quality. To see how I pick stocks from my portfolio, check out the video at the link above and the description below entitled Beating the Market, my system for picking winning stocks. Until next time, happy investing, and we'll see you again soon.